The unrest affecting South Africa's mining industry has been placed at the center of the currency bloodbath that the rand finds itself in. South Africa's rand edged higher against the dollar today after touching a new four-year low on Tuesday. The potential for further weakness remains as investors ponder the weak outlook for the local economy. Government bonds could suffer too as appetite for emerging markets remains muted amidst signs that the US will start scaling back its quantitative easing program. Joining us now to discuss the rand and who is benefiting from this bloodbath is economist Peter Worthington from Absa Capital. Peter, good evening and thank you so much for joining us.
Thanks for having me.
Now, some analysts are saying that the weaker rand is attributed to the decreased rate of growth in the Chinese economy. How accurate is this explanation?
Look, I think that's one of the factors. Rapid Chinese growth has been responsible for very high commodity prices over the last 5 to 6 years, and that's been something that South Africa has benefited from. But now those commodity prices are easing. And this country's exports are 43% basic commodities and then another 10% or so basic metals. So weaker Chinese growth, which is weaker prices for these goods, is bad news for South Africa, and it shows up in the currency.
Are there any other big global trends that we should be attributing the weaker rand to?
Look, you mentioned the quantitative easing
Yes.
program and expectations that the Fed would start pulling back on that. We call it the taper, and the market is highly nervous about the introduction of the taper. Our view is that the US economy is growing at a pace that will leave the Fed continuing to purchase about $85 billion worth of assets every month, and that the taper is going to come in January next year. But obviously there's a lot of heightened expectations about it, a lot of fear. And when the Fed does start raising or tightening monetary policy, we're actually seeing reversals out of emerging markets across the globe, and South Africa's caught up in that.
Of course, so when we turn broadly to emerging markets, are there any generalized trends that we can expect from the Fed, pulling back in terms of quantitative easing?
Look, I think every emerging market that runs a large current account deficit like South Africa that is dependent on foreign inflows, foreign capital inflows, is going to be vulnerable to the Fed tightening. Fed tightening and stronger US growth generally will lead to a rise in the dollar generally. So every currency that's sort of traded against the dollar is probably going to suffer a little bit as well.
So if we go in, more domestically in South Africa, there's this perception that a weaker rand is good news for export-orientated industries. How accurate is that? Oh,
it's completely accurate, and I think a weaker rand is good for the country. There's no doubt about that. It's good for the mining sector. It restores marginal mines to some semblance of profitability. It's very good for manufacturers, as you mentioned. It's a good growth stimulus that this country desperately needs. So all in all, that's great. What is not great is the volatility with which it happens.
And at what point then, Peter, does the rand become so weak that it's not beneficial to any industry in any sector?
Well, I mean, that's a highly hypothetical question.
Right.
I think, if we have a very sharp, very rapid delocation of the rand, that causes problems for monetary policy, particularly on the inflation front and central bank policy to actually keep inflation controlled. So that's why what I'm saying, when we don't want very large sudden dislocations, but a gradual depreciation of the rand is something that I think most economists would agree is a good thing for the country, provided the competitiveness advantage doesn't then get bid away through higher wages.
Let's deep dive further into the domestic front and particularly look at some of the domestic factors that are contributing to a weaker rand. What would these be?
Look, you mentioned the problems in the mining sector.
Right.
That's been huge, and we can actually see that those are the issues that matter in the reaction that we had to, let's say, initially a weaker than expected speech from Zuma, and now his very encouraging comments today. So that's been a factor, but it actually goes broader than that. We have a very big current account deficit that is partly because we have these adverse terms of trade coming through in commodity prices, but also because we import a lot of oil and a lot of capital goods for the infrastructure program. And that large current account deficit is a structural feature of the economy at this point in its cycle. It's not going to go anywhere.
Of course, the weaker rand now, in terms of its impact on the consumer, means more inflation. Is there a silver lining for the South African consumer in the short term?
Look, that's a really interesting question right now. Just how much does the rand's depreciation show up in terms of higher inflation? The Reserve Bank have estimated that on average over the long run, the pass-through effect is about 20%. Now, the rand is depreciated around 15% against the trade-weighted basket, so you would think that would show up in 3 percentage points on the CPI. Yeah. But it's not going to work like that this time around because domestic demand is very weak. So producers and retailers don't have a lot of pricing power, and part of that rand depreciation is just going to be absorbed into margins.
To a large extent, the labour unrest that we've been seeing over the past 18 months or so has taken centre stage in terms of being labelled as the key factor behind a weakening rand. Do you think that that is the biggest reason in South Africa, or is it just slightly overplayed?
That's probably the biggest domestic reason. I mean, there are other factors. There are fears about electricity shortages, a perception that government doesn't really have a strategy to boost growth over the long run. But I would say that, yes, the mining sector is the biggest factor weighing on the rand. And that's why I think that if we could get some kind of wage price accord, better cooperation between the mining houses and labour in a way that reduces the volatility in that sector, it would be good news for the rand.
And the mining houses right now, in terms of the impact a weaker rand is having on commodity prices, I'm sure although are sitting happy. How sustainable do you think this upbeat moment is going to last for?
Look, it is definitely a welcome relief for them. Many of the platinum mines and gold mines were marginal at the old exchange rate. This is a relief, but it really depends on where the wage agreements settle. Right. We have the whole wage round to go. Gold sector, obviously, the unions have put in some very high initial wage claims. It's probably a bargaining position. We're not going to settle anywhere near there, but that actually really matters is where we do actually get those wage agreements at the end of the day.